We have the management of Skipper to talk exactly about why the stock is buzzing in trade. 19.4% uptick is where Skipper is logging in gains today.
Cheryl, 19.4% is what we're seeing in terms of gains. Surely a strong move that is coming in terms of the growth for the company, especially they've won an order of around 1,135 crores. And we're joined by the management, like Sharan was saying. Sharan Bansal, director at Skipper Limited, is joining in with us. Thank you so much, Mr. Bansal, for joining in with us this afternoon. And obviously, let's just start by talking about this big order win that you have coming in. Could you share more details on that, and especially in terms of when will the execution actually start for this order, and is it margin accretive?
Yes, of course. The order that we have secured right now is approximately 1100 plus crores. This order is split between domestic T&D from Power Grid Corporation, which is approximately 700 crores, and the balance is coming in from export markets, primarily in the Middle East and North Africa, from countries like Egypt. We have been very bullish on the overall transmission and distribution demand scenario in the recent years, thanks to the push in renewables. The domestic market, which has not been so exciting for us for the last 4 or 5 years, we are seeing a good revival in that in this year. So this 700 crores order coming in from Power Grid Corporation is a testimony to that. And we are expecting more business to come in from the domestic markets as well. And yes, all orders with thanks to the good demand scenario definitely are margin remunerative for the company. We are expecting a 12 to 13% EBITDA margin for new orders as well.
Okay, surely you are seeing that revival, you were talking about coming in the domestic space as well. I just want to understand also in terms of, you've indicated at the end of FY23 that the pipeline is over 10,000 crores. So what is it that you're looking like? How is that pipeline looking like right now? And is the traction, like you mentioned, more domestic? So even export, is that also seeing a revival then?
We are seeing good growth in both domestic and international markets. Presently, our order book, which is about 5,300 crores plus, is split approximately 70-30. So 70% being domestic and 30% being exports. So we are seeing good traction on both sides. Again, like I mentioned, thanks to the large investments in renewable energy across the globe, which is leading to power transmission investment. So we are expecting a growth of 25% CAGR over the next 3 years quite comfortably, thanks to this order book which we have and the market potential of new orders which are going to come in for the company.
Right, Mr. Bansal, this Sharan was joining in the conversation, and like you mentioned, you are expecting that 25% CAGR revenue growth over the next 3 years. You in fact reiterated this particular statement of yours. If you could tell us, then the revenue target for FY24 would be around 2,500 crore rupees?
Yes, quite comfortably we should cross that number.
Right. Let me just move ahead then and let's talk about your margins in the quarter gone by. It had dipped it has dipped slightly to about 10% versus 11% earlier that it has seen. Could you tell us what sort of margin outlook you have going ahead?
For sure. Overall, the margins of the company need to be looked at on an annual basis and not on a quarter basis. For an overall last year basis, we did have a very strong increase in the operating EBITDA margins of the company. The margins, final margins were impacted by some forex losses, which had accrued because of the sharp depreciation in the Indian rupee. However, what we are focused on is the operating EBITDA margins of the company, and they continue to be healthy, and they definitely, on the back of these present orders as well as the new orders coming in, we expect the margins to continuously improve in subsequent quarters as well.
Okay, so continuous improvement is what we're expecting in terms of margins going forward. But what about the debtor days? That surely has improved, 70 days as against 100 days, what we saw in FY22. Is there more room for improvement there? And what about the overall debt of the company as well then?
The overall debt of the company continues to be in a healthy position. We have, despite the growth in revenue, we have brought down the absolute debt of the company by close to about 70 to 80 crores in the last financial year as well. Not just the debtor number of days, but we also expect improvement in the inventory number of days, which continue to remain high right now. However, we are expecting improvement in that in the quarters to come with the increase in revenue output.
All right, then, Mr. Bansal, we'll leave it there. Thank you so much for joining us on the show, giving us a take on the new order win, as well as where your revenue and revenue growth, as well as margins are headed for Skipper going ahead. And also, congratulations on this new order. The stock is definitely taking this pretty well. 19% uptick coming in for Skipper. So that was also, you could consider the first stock for this edition of Market Fatafat.